Welcome, my name is Ty Seddon. I'm the Chief Technology Officer and Data Scientist here at Valspresso. I joined Valspresso in 2009 in the wake of the global financial crisis. I wanted to be part of an organization that sought to solve problems for ordinary investors and society at large. This is the core of everything we do here at Valspresso. Today, I'll be introducing Valspresso's sentiment and fundamental indicators, which are now available in OpenFactSet. This is a set of indicators that have predictive power and allow managers such as yourself to generate persistent alpha. We have a unique approach that is based on the idea of market psychology, which I'll get into in a little bit. Our goal is to serve ordinary investors who are trying to save for retirement and their children's education. Our goal is to reduce the suffering caused by market swings. It just so happens that our indicators generate persistent alpha. Valspresso wants to get this innovation in the hands of those who can help ordinary investors the most, fund managers such as yourself. Our research tackles the big questions. What are the causes of market crashes? Why do only a few active managers deliver alpha? Why can't pension funds meet their obligations? Why do markets sometimes act irrationally? In other words, why do our prevailing theories sometimes break down? If a theory breaks down, obviously we must be missing something. We need a new approach. This is exactly what Valspresso has done. After 2 decades of research into those theoretical questions, Valspresso has developed a theory of market psychology that is motivated by risk management, accounting, and social purpose. The theory has resulted in some innovative approaches in how to manage risk and capture alpha. For example, you may believe that a new product offering will help a company's stock price, or disruption to raw materials may hurt an entire sector. But given that we have more information coming at us at a faster rate than can be consumed, how do we make sense of it all? We need some framework or tool to make sense of it. Let's look at how sentiment drives the market. In simple terms, all available information such as filings, news, and analysis gets incorporated by investors to form their sentiment. That sentiment then drives the price they are willing to pay for a stock. This leads us to a really powerful question. How do we measure sentiment? We can't read the minds of investors. We could read what they say on social media, but we all know that what people believe, say, and do are not always aligned. This is especially true in competitive marketplaces. If you are a high-frequency trader, you might find some signals that have not been incorporated by the market yet, but that's fleeting. We want something more systematic that will work over the long run. The best measure of an investor's sentiment is the price they are willing to pay for a stock. Implicit in the price is a forecast of a company's future operating performance. More precisely, the question is how much of a stock's price is driven by sentiment? How much is driven by market psychology? Can we put a number on that sentiment? Valspresso is the only company that can objectively answer that question. This is our innovation. We have a patent that precisely measures that sentiment in the stock price. So once we measure how much of a stock's price is driven by sentiment, there are some interesting follow-on questions. Is the sentiment positive or negative? Is the sentiment large or small? Does the sentiment represent high or low risk? Is the stock potentially mispriced? It's those follow-on questions that really provide predictive power. Once you subscribe to Valdex in your daily data feed, you'll find several indicators. Those indicators fall into 2 categories. The price sentiment indicators measure the amount of a stock's price driven by belief. The fundamental indicators assess the profitability, solvency, and management efficiency of the company. These are provided for all the U.S. publicly traded companies every day. By combining these indicators, you can develop powerful screeners for your own strategy. Valspresso originally used those indicators to develop a risk management framework. Our research revealed that it resulted in persistent alpha. We demonstrated this in backtesting and with real money. The key takeaway is that if you're smart about managing risk, alpha will come. The founder is a risk expert who is a director of PricewaterhouseCoopers, consulted with the Treasury Department on TARP. He's a CPA, was a financial advisor with Merrill Lynch, and has done humanitarian work with the United Nations. Valspresso's mission is to get this innovation in the hands of those who already manage the money of ordinary people. This is not a get-rich-quick algorithm. That was not the intention. The intention was to protect investors and help them build wealth over the long run. Our indicators are based on existing public information, but is combined in a unique way. There are hundreds of financial data points available for public companies. There are a near infinite number of ways to combine all available public information. We, as an industry, have only explored a small number of possibilities. Our method is unique, and our method is patented. It is compatible with other strategies, so you can layer your own expertise and innovation on top of the strong alpha foundation. Let's get into some numbers. Using an example from our website, you can see a very respectable win rate of 52.6%. In this example, the screener is being used to predict those S&P 500 components that will outperform the majority of other S&P 500 components over the next 20 trading days. If you don't want to limit yourself to the S&P 500, you can define your own constraints. On our website, we have other scenarios that perform equally well across market caps and sectors. This 52.6% win rate translates into a respectable 0.05 information coefficient, which translates into a very healthy 4.9% average alpha. All of the details are documented on our website. When you build your own strategies, you'll have different requirements and will need to build your own screener. So I'll walk you through how that's done. It's really quite simple. Let's start by looking at the fundamental indicator. Just like in school, grades range from A to F, with A being the best. A company can also be given an I for incomplete. It means that there was incomplete or insufficient financial history for the system to grade the company. Just as before, the percentages represent the win rates of predicting S&P 500 components that will outperform the majority of the other components over 20 trading days. Let's see where the best win rates can be found. Companies with A or B grade tend to outperform the others. This is our first statistical proof that the indicators have some predictive power. Here it's relatively small, but as we layer additional indicators, you'll see the stronger predictive power. Next, we combine fundamentally healthy companies with the price sentiment quotient, or SQ. The price sentiment quotient is the amount of a stock's price driven by belief. This number can be positive or negative. SQ ranges from 1 to -1. We'll choose some ranges for SQ to complete your screener. You want to choose some Goldilocks regions based on your risk tolerance. The website dives deeper into the risk profiles associated with various regions of SQ. The blue squares indicate the regions chosen for this particular screener. When you build your screener for your strategy, you may choose regions in a different place. Applying the screener rules in this example, we get the 52.6% win rate that we saw earlier. That's it. That's all it took to get that win rate and a 4.9% alpha. This is just an example. You can build your own screeners to match your requirements. It is compatible with other strategies, so you can layer your own expertise and innovation on top of the strong alpha foundation. To build your own screener, simply define your requirements such as market cap, sectors, etc. Then, within those requirements, explore the predictive power of the different indicators. Experiment with screener breakpoints to achieve your investment objectives. Finally, incorporate the screener into your strategy for a strong alpha foundation. Prevailing theories often fail us when we need them most. Valspresso's theory of market psychology is a powerful tool for understanding what drives the behavior of the stock market. It is critical to achieving our goal of helping ordinary investors secure their future and their children's future. Valspresso wants to get this innovation in the hands of those who can help ordinary investors the most, fund managers such as yourself. We understand that meeting your investment objectives is hard. We understand that you're being asked to do more with less. Valspresso is here to help you and your investors. Combine our sentiment and fundamental indicators with your own expertise to build a stronger future for yourself and your investors. Next, you can learn more on our website, valspresso.com. Or you can meet with members of the Valspresso team. We can also get you set up with a free trial subscription today. Thank you.